Welcome everyone to our weekly Forex market analysis call. This is in preparation for the week of August 28th to September 1, 2017. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful, especially with trading over the summer. There is thin liquidity in the market, so the moves can be exaggerated. So please be mindful of that, and if you have questions about your individual investment needs, I recommend you talk to your investment advisor. Okay, so we'll start off as usual with our Forex factory, look at the calendar, and then we'll go on to the charts here. To start the week off, so last week the most important thing was the Jackson Hole Symposium that we had on Thursday and Friday. So out of that, the US dollar took quite a hit because Yellen, Fed chairperson Yellen, market was expecting to hear maybe more of a timeline around when they were going to reduce the balance sheet, and she didn't quite address that. So as a result of that, the market took that as really negative. So right now, as things stand, market participants are not expecting an interest rate hike come September. So we're likely to see another interest rate hike in December. And so far, there haven't been any sort of clarification around when they will start cutting back on the balance sheet as well. So as overall then, as a result of all of that, taking that into account, so US dollar is weak at the moment. So just keep that in mind. And going into this week here, Monday, it's a holiday for UK there, but overall we don't have a lot of red data here. Or Tuesday, we do have consumer confidence number for the US. So these numbers, if they keep coming as negative, that would add further bearishness to US dollar here. And then we have building approvals numbers that will be important for Australia. CPI number here will be important for Euro. And then we have ADP non-farm employment change. So this is the kind of the precursor to our non-farm payroll number. So it is usually an important number to pay attention to. Also, the GDP number will be important here. And then capital expenditure out of Australia. Nothing earth-shattering here, nothing crazy. So we should have a better week, or the price should react a little bit more in a normal way going into this week here. GDP numbers for Canadian dollar here, and then employment claims. The most important thing here. Oh, also we have manufacturing PMI number for China. So for China, manufacturing is very, very important. And these numbers that come out, we don't really, trade the Chinese currency. However, the Australian dollar and New Zealand dollar will be impacted by China because China is a big trade partner or an export partner for Australia and New Zealand. So if the numbers out of China are negative, that will have a negative impact on Australian dollar and New Zealand dollar. So just keep that in mind. So the most important thing here will be our non-farm employment change. Usually it has a big impact on the US dollar. So here we are expecting the data to be a little bit more softer than what it was last time. So if the numbers come out less than what the forecast is, that will be negative for the US dollar. We also have PMI numbers both for the US and British pound. Again, PMI numbers are very important. They are the leading indicators, so those numbers will be important. But overall, is the non-farm payroll numbers that will be the highlight of the week in terms of fundamental news here. So let's take a look at the charts. We're looking at Euro-US dollar daily chart here. As we can see, Euro had been trading in a range for quite some time here for the last couple of weeks. And now we have seen actually almost a month here, it had been trading in this range between 1700 to about 1900. Now we have finally broken out of this range. So that gives it a bullish bias here. So this is the range we were in for the last 3 weeks here, or almost 4 weeks, and now we are above that range. So going forward, right now we are bullish on euro. In terms of what to expect, we could see a pullback into this 1838 number and a further move to the upside here. So overall bullishness for euro, and the next target is 120 to the upside. So if we could get a pullback and then a further move to the upside, but euro dollar looks quite bullish. Pound here, pound is not quite the same as the euro is. Euro is overall more bullish because the market's waiting on ECB to start cutting back on their asset purchase program. So when ECB cuts back on their asset purchase program, that is positive for the euro. Anytime monetary policy is tightened, it is good for the currency, and the currency generally will go up as a result of that. So that's the scenario with euro. That's why euro is so strong. So in terms of the British pound, Brexit is weighing on British pound once again. So at this point, in terms of our weekly movement for British pound, it was based on this one, we were negative. It did go down. We were bearish last week. But right now, this is very neutral. The weekly close has been neutral. And in big part, that was because of the Friday closing here. We had a big bullish candle on Friday. Now, that was mainly due to Jackson Hole, where Yellen failed to deliver on what the market was expecting. So as a result of this one here, the candle closing here very neutral. We could see it go either way. So we have to be open to trading it in either direction. So we could see the price go up. So the range that I would be looking for, so we may see one of these moves. Price will likely go and test this level. So let's just go down into our daily chart so we can see the level better here, this 127. So this previous support and resistance, that's where price is stuck at the moment, 127.80-ish level. So first we need to see price break through this level, or else we could see price go all the way up into this 130.50 level. So this is the range that I'm going to be watching. If price gets into this 130.50 range, that would be a good level for us to look for a potential short opportunities, because this is where price could not go above this level. So this would be a good potential selling opportunity once price gets here. But we could see one of these things here as well. Price may come down and then do a further move to the upside, and then we are likely to run into one of these moves. So that's what I'm looking for. Price to basically pull back, especially because of, we do have non-farm payroll coming up as well. And with US dollar taking a hit right now, we could see a pullback in this. So overall, I am open to trading in both directions for pound US dollar. It's more neutral than anything. Aussie here. Aussie did come down, but in terms of our weekly candle close, we have been trading in this very small range for some time now. So let's take this out of here. Right now, the way the candle closed, we had a bullish pin bar here for previous week. Right now, the way candle closed is we have a big pin in the bottom again. Price opened and closed at the same point, so that didn't really do much. But overall, because of these 3 pins to the bottom here, we're looking for a further move to the upside. In this case, the target would be 80.50 to the upside. So bullishness in Aussie as well. New Zealand, however, has been weak. We have not seen as the similar moves to Australian dollar in this. So the weekly candle close here is bearish. So here we are looking for price to move down further. So I'm looking for price to come down. So I'm bearish on New Zealand dollar. However, this is an important support that it's at right now, 7,200. So we do need to see price break through this level. So if it doesn't break through this level, then we could see a reversal of this last week's move. So it's very important, first of all, to see a breakdown of 0.7200. If price breaks down, we're looking for a further move to the downside here. Then we are looking for 7100 level, or even potentially lower into 7033-ish level right into here. So overall, I am bearish on New Zealand. Dollar CAD here. Dollar CAD has had nice moves. So in terms of our weekly candle close, we had a bearish pin bar in dollar CAD, and we had follow through to the downside as we expected. So right now, based on the weekly candle close here, we're looking for further downside in this. So the target here would be 1.2420. However, we are fairly close to support here, so we do have to keep that in mind. And another thing to sort of watch out for a Canadian dollar would be the NAFTA talks. The negotiations, last week President Trump came out and said that NAFTA negotiations, we may not be able to come to an agreement, and we may have to just scrap NAFTA altogether. So it may be just a negotiation tactic. However, we do need to keep in mind, so if we start hearing more negative comments around NAFTA, that will be negative for Canadian dollar, because Canada is a big export partner with the US, and right now, that's just how the trade stands. Till Canada can find other export partners, US, just because of the proximity, plays a big role in terms of economy, Canadian economy. So keep that in mind. If we start hearing a lot more NAFTA negative comments, that will be negative for Canadian dollar. Right now, dollar CAD is bearish, and I'm looking for a further move to the downside. The first target would be 1.2420, and below that, I'm looking for 1.2220 here. So these two targets will be the next targets to the downside. But keep in mind, price did bounce off of this level. So we could see an initial bounce as the price comes into this level. But once we see a break of this level, then I'm looking for 122.20 to the downside. Swiss franc here, Euro Swiss. Euro Swiss, we are in this range-bound market. We've been in this range for last few weeks now. So we are going to continue looking for the range-bound moves, looking for price to stay within the range. So in here, what we are seeing is Euro is not quite as strong right now. We do see price moving up. However, it's getting to be a compressed move. So even though all these candles are green, they're kind of going sideways. We haven't really made much leeway or much headway here, sorry. So, excuse me, just one moment, please. Okay, so here the important thing will be to watch this level here, which is 1.1420 level. So we do need to see a break of this 1.1420 for the trend to continue to the upside. If you're not able to break this level, then price is likely to come back towards the bottom of the range. But from weekly perspective here, this is the range. The top of the range is 1.1520. And the bottom of the range is 1.1250 level. And our weekly candle close is bullish. Even though it is a small candle, it is bullish. So overall, this is bullish, but we do need to watch that level. If the price breaks above, then we're looking for continuation to the upside. And once price gets into the top, that's when we are looking for a reaction. So the move that we're looking for is break to the upside first, a pullback, and then price goes up top, and then we may see some sort of a double top type of pattern here. So overall, a range-bound market, looking for further move to the upside here, to the top of the range. Pound Swiss has been very weak. So just like, other pound crosses, Pound Swiss is weak. The weekly candle close is bearish, but we are into this heavy support area. So that's something we need to keep an eye on. looking for price to go into this 122.50 area, which is the bottom here, and this is where we may see a reaction, but because we haven't broken this area for a long time. But if we see negative numbers out of the British pound, sorry, out of UK, or if we see more Brexit type of commentary, we are likely to see a break of this. So bias will be bearish, and we are looking for 22.50 as the first target, and then 2100, 1.2100 as the second target to the downside right over here. But I am expecting after this big move to the downside, which started with this bearish pin bar, I am looking for price to start coming into support here, and the move here may not be as good as it was previously. Dollar Swiss here, bearish candle close on Friday. Overall for the week here, very bearish candle close. So we're looking for a further move to the downside, bearish on this. So we could see a pullback like that and then a further move to the downside. So 9600 will be a potential level to look for potential short entry, and we're looking for a target of 94.50 here, this bottom. Okay, so that's the Swiss. Let's quickly take a look at the yen crosses over here. So the yen, yen has been very strong. So all the yen crosses have been going down lately. Couple of things here. We did see a big, a big run in yen crosses. So big move. So generally, when we see big moves like that, we do tend to see pullbacks because people need to book profits at some points. Big funds have to book profits at some point, which result in pullbacks. So pound yen here, overall, the bias just with the yen crosses is overall the bias is to the downside, but we are seeing pullbacks. So the pullbacks could continue a little further here. So in terms of this one here, 14200 is the level that I would be looking at. So we can get rid of these two here. So that's what I'm looking for. We have a rejection here because that's the pin here, which means rejection. We have rejection of the bottom here. So looking for a further pullback into 14200. So if you go into our daily, this is the 14200 level. It could extend all the way up into these pins here, which would be 143, almost approximately 143.20 level. So that's the pullback we could see. A shallower pullback would be approximately that, so 14200. So that's what I'm looking for, move into 14200 and potential into 143.00. So those will be the two targets. So we're looking for pullback in the yen crosses. So here's our euro yen. Very, very bullish move in this case. So we're looking for a further move to the upside. The target here will be 131.40 level to the top here. So that one is just bullish. Aussie yen, looking at our weekly candle close here, this looks bullish. Here, price rejected this level 2 times now, and we have closed higher. So as a result, looking for a further move to the upside, the target would be 88.00. Dollar yen is very neutral close. So right now, it's at an interesting level. So we are into support here, but US dollar itself is not very strong. So as a result of that, a big thing, so this is a range-bound market at the moment. So we need to see, for the price to continue to the upside, we need to see a break of 109.80 to the upside. And then if the price breaks up, we are looking for 110 or 1100 as the target. But if the price breaks to the downside here, so this is, of all the yen crosses, this is probably the weakest at the moment. So 108.70, we need to see a break of that. So if price breaks to the downside, then we're looking for a move into a 107.50 level. So at the moment, range-bound market, and we have to be open to see a break to either side. All right, so here we have euro pound. Euro, as we can see, has been very, very bullish, closed to the upside. We're looking for a further move higher here. The target, we're almost at that target of 92.80. So let's go. We need to squish this a bit because here we are almost into 92.80 target. The next one will be 94.13 level here to the upside. So very, very, even on a monthly here, last few months, it has been very, very bullish. So looking at further move to the upside, so we could get a pullback into 92.30 and then a further move up. So bullish on this one. Jackson Hole, no, it hasn't really changed anything fundamentally. It has just made the market sentiment more bearish for US dollar. So Yellen didn't really say anything that was fundamentally different than what the market was expecting. No, so not what the market was expecting. Sorry, she didn't say anything that has fundamentally changed the outlook for the US. She just failed to mention stuff that the market was expecting. So as a result of that, it just has created negative market sentiment for the US dollar. So I'm not saying sometimes not saying stuff drives market sentiment just as much as saying stuff does. So that's kind of what happened. I agree. I think a balance sheet has to be reduced. The U.S. economy is doing much better than it was, back in the day, and this is the time where all the central banks, I think, they need to normalize their policy and not be in such a loose monetary policy stance. So Fed has already started doing that. I think we can expect to see another rate hike from them, and at some point they will start reducing their balance sheet. They have to, cannot continue on like that. So so it will be, I agree, we're looking for a potential rate hike in December, not in September. I think that's what's putting a kind of a damper on the US dollar for now. But overall, I think the rate hike, we could expect the third rate hike this year. And going forward, balance sheet reduction, I think ECB will start doing that as well, cut back on the monetary policy, so on their asset purchase program as well. So here, Euro Aussie here, we have a bullish candle close. It has been in this range for the last 3 weeks now. So now, important thing here, we are into an important resistance level, so we do need to see a break. However, the way the candle closed here, it is quite bullish. We are right into it, and we are right into our resistance. So we do need to see a break of this, but it looks like we will see a break. So we're looking at 1.5180 as the target to the upside. But again, just when we are into strong support or strong resistance levels, we do need to be patient and see the break, see the price go on the other side, and then go to the upside. So basically, bullish on this, 151.80 will be the target to the upside. So that's all I have. Any questions? I think, well, Monday will be slow. Tuesday is usually when things start picking up. So I think we should start seeing market activity on Tuesday. However, we are into last week of last week of August here, into summer holidays. So overall, I think the liquidity will be thin. A lot of people will be away. So market may not be as brisk. Gold. Let's take a look at gold here. Gold weekly is bullish here. We have rejected and stayed above the previous high here. So this looks bullish. So looking for a further move to the upside. 1301.18 will be the first target. And second target is, we could potentially go into, so 1320. 13.50. So that will be the next target to the upside. So first 1300 and then 1320. Yeah, with any moves, anytime there are, there's a trend, there's always pullback. So we always look for pullbacks before the continuation. Euro yen, we did go through Euro yen. All right, so I think that's it for now. So we'll call it a wrap. You guys enjoy the rest of your weekend, and I will see you next time.